Hi there, Serial Trader here. I'm going to do an update on the major US indices and starting off with this chart of SPX. Now, it's been certainly laborsome as we've been going to the upside here, but for quite a while, if you've been following along for the last, multiple weeks or even a couple months, been working this move off the March 4th lows here. And got the 1, the 2. Obviously, there is some debate as to how to label the 3 and the 4, but I think I've comfortably settled on this, where you got the 3 down, 3 up, 5 down for the expanded flat wave 4. And then we've been expecting a 5th wave up to new all-time highs to finish this overall 5-wave sequence off those March 4th lows. Now, this has been a very low volatility, choppy progression here, but I think I found something I can work with, and that's where we got the 1, the 2, calling that the 3. Now, in order to avoid 4-1 overlap, you can fit this weird sideways choppy action as a triangle, and A, B, C, D, E, triangle 4. It's ugly, but you can certainly get it to work without breaking any rules. And now that would put us in this final 5th of the 5th, and it looks like we maybe got the 1, 2, now looking for the 3, 4, 5 of the 5th. And I think towards that 4,300 area still seems like a nice target zone for multiple reasons that I've gone over in some past videos. But I mean, even if you just do something as basic as this, I mean, there's a lot of confluence in that 4,300 range, but just something like this. So the largest swing, the largest subwave of this triangle 4 here, if we do the 1.3, 2, and the 2 range extensions, well, the 2 gets us basically right bang on 4,300. And now there's lots of other relationships that get us in that 4,300 area, but just a quick projection just to demonstrate there. So I think into next week, possibly towards the end of the week, I think there's a Fed meeting, so usually you have some bullish run up into that, and even potentially a pop reaction, and then perhaps that puts in our high for who knows how long. Could be a significant top, right? That's kind of what I'm working into next week. As far as positioning, I still have both sides covered. If we do get close to that 4,300 area next week, I'm going to close the longs and leave the shorts in place for what I think will be an inevitable, at least, retracement of this overall 5-wave sequence from the March lows. And if we are actually finishing something larger degree, then perhaps it'll be more than just a retracement of the sequence of the March lows. Maybe we got something more substantial to the downside. But until we get to the other side and finish, we have to finish this up move first, see what kind of downside price action we get. How aggressive is it before we can start, basically making any assumptions or projections about what kind of pullback we're going to get. But so in the very, very near term, just looking a little bit higher here. But then I think we really need to be on guard for a substantial top and potentially some significant downside action after that. One other thing I was looking at, so let me just delete some of this here. And I was originally debating, okay, maybe we got an ending diagonal in play for a 5th wave, because that could certainly be a finishing sequence as well. But when you actually go through it, it doesn't really, it doesn't work, and let me explain. So an ending diagonal, it's basically just a much more strict, I'll say it's strict because there's a lot more things that need to be adhered to for it to be valid, but a more strict version of like a classical rising wedge, right? And usually a rising wedge, you're getting close to the end of a move, and then eventually you break down out of that rising wedge and more than fully retrace that rising wedge. But an ending diagonal, you got the 1, 2, 3, 4, and 5. 4 must overlap with 1 unless, unlike a traditional impulse where 4 should not overlap 1 or cannot overlap 1. But there's also some other things. So 3 must be shorter than 1 in an ending diagonal, and you can see 3 is not shorter than 1. So let me just get the point where it would have to have stopped. Okay, so and even if you put 3 here somehow and do some sort of weird expand flat fourth wave or something, it's still slightly too long if you labeled it there. So that still doesn't work. And then 5 would have to be shorter than 3. And you know, it's not following the rules properly. Even though it might at first glance kind of look like an ending diagonal, it really isn't a proper one. So that's why I went with the other interpretation, and that's where we have this A, B, C, D, E. That's where we end our fourth wave there, and then let me just get rid of this. Then you can see as long as the fourth wave doesn't finish in an overlapping fashion to wave 1, it is legitimate. So even though the A wave, and let's go back to the triangle subwaves here. It's not the prettiest triangle, but it can certainly fit the rules. Okay. And let's bump that up, I guess. Yeah, so even though the A wave of the triangle does overlap with the extreme of wave 1, as long as the triangle finishes, so as long as the E wave terminates above the extreme wave 1, that is still valid as far as not overlapping with 4-1 overlap. So there's, yeah, that's what I've settled on here. So I basic messages, I think we put some pressure on 4,300 possibly into later next week, and then I think we should really be on guard for you know, potentially a major top. But we'll have to see. I mean, so far this has adhered to expectations. We were looking for one more push up to take out the prior highs here, which I believe was at 42.38. So we've already met that minimum expectation. We made a marginal new high here at 42.49. So the sequence, you know, it's met the basic requirements, 5 non-overlapping waves to the upside, but I just think a little bit more, and then we can really be looking for that finish. Okay, so I won't go any further into that. I think I've made my case. Now go over to the Thinkorswim Candlestick charts here, and I mean, not any remarkable candles, just a bunch of small real body candles. I really don't see any clean signals to speak of on the daily. Same with the weekly. Just a creepy crawly upside kind of action. Obviously a new weekly, you know, well, new all-time high set. But nothing really else to comment on there. And it's really the same for the other indices. Well, not exactly the same. So the Dow is lagging a bit here, but you know, I think it's just not like if the Dow is really going to tank. I don't think you can really do that sufficiently when the S&P still has a little bit more upside. So the Dow, I mean, you might have some strength next week, maybe make a new high ideally, so that the Dow can also finish along with the S&P. I don't care that much about the Dow, but worth mentioning sometimes. Weekly candle on the Dow. Now that's is that a bearish engulfing weekly? Let's see here. So we closed last week at 34,756. Opened this week 34,766. Okay, so we did technically have a little bearish engulfing weekly candle on the Dow, but it doesn't look very strong. So I'd be suspicious of that. But worth mentioning, there is a potential reversal signal on the weekly time frame here on the Dow. So just throwing that out there for interest's sake. NASDAQ composite. NASDAQ has been getting some traction here. Still not that clear on the overall count, but I would imagine if the S&P is going to go up a little bit more next week and make some new highs, it looks like the NASDAQ's probably going to tag along and maybe put some pressure on its former highs back here from, what date was that now? Back in April, end of April. So that might get taken out next week. We'll have to see. Weekly candles on the NASDAQ. closed near the high of the week. Not much else to say other than that. I mean, this does look kind of like a sideways, possibly a little triangle we might be starting to peek out of. So tech might have some more significant upside. We'll have to see. But not that clear at the current juncture. Okay, VIX. VIX pushing lows, which makes sense because the market's pushing highs. So not much remarkable there. But I will go back to this VIX VVIX tool because there are some things to point out. So usually when you're approaching a more significant, or we'll say a larger degree top, you should have a larger, more lengthy, as far as time goes, divergence. And I think we're starting to get that. So you can see that VVIX has clearly been making higher highs and higher lows from back here. And VIX has been making lower lows. So you got a nice, more drawn out VIX VVIX divergence. And we do actually have some action on VVIX above the red moving average. So you got the divergence, you got above the red moving average on VVIX. So really the next step to get a sell signal will be getting below the blue moving average here on SPX, which I don't think we're quite ready to do yet, but possibly late next week or the following week, we might get that reversal and actually get a sell signal on this. But right now you just got the ingredients kind of developing. It's not there yet, so still technically in a bullish mode. But nice to see this kind of setting up ahead of time, just adding fuel to the idea that once we do get that potentially final move up this coming week or so, there are some other things supporting that it could be a significant top. All right, that's good for now. Serial Trader signing off.